Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 20th of August, 2022. And this is the weekly technical analysis for spot gold and dollar yen for the 4th week of August. And we can see the inverse correlation very clearly on these pairs with the precious metal shooting down and the dollar yen climbing back up. So the dollar has been rallying. Let's take a look at spot gold first. And this week you'll see there's a lot of US news coming up, and some key ones as well. With Friday, there's a Jackson Hole Symposium, the annual affair, with Fed Chair Powell scheduled to give a speech as well. So there will be some potential increased volatility on the Friday. But before that, there's also a number of news to watch out for. So right from the start of the week, right from the Monday, it fell with an engulfing, bearish engulfing candle after climbing up all the way to the 1800 resistance zone the previous Friday. And it continued all the way down into the support zone, and in fact closed past the 1750 support level. So likely there's some bearish momentum to continue to drive this lower into the 21 fib retracement back to the 21 fib, and perhaps down to these previous lows as well, just above the 1700, so around the 1710 area. So after a strong recovery the previous few weeks for spot gold, it has finally reached its retracement level at the 62 fib. That was the 62 fib retracement. Also a key round number at 1800, and also a previous trend line that it fell from, and then pull back to retest. So these three combined to create a strong resistance level, resistance zone, and it fell from there back down below the 38 fib retracement. So fell 2 fib levels, past 2 fib levels. Okay, let's take a look at the weekly time frame as well. You can see that's very bearish engulfing candle, going past 2 previous weeks, and that's why it could be further bearish continuation into the 21 fib retracement area. And if it does continue its bearish move further, depending on how these news, whether it creates a trigger to drive this lower, there is the next key support level at the 1700, key psychological level there. Okay, let's take a look at what triggered the drive lower, although the key news only came in on the Wednesday and Thursday, but right from the start, so this was a technical retracement here, right from Monday, as there was no news. and it was only on the Wednesday when the Federal FOMC meeting minutes came out, which highlighted that they will continue to increase rates until inflation has substantially decreased. So that indicates likely the next meeting there'll be at least a 50 basis points rate hike. And the retail sales figures for last Wednesday before the minutes also showed slightly better than expected. And then on the Thursday, it was further trigger for the US dollar to push up higher, with the Philly Fed manufacturing index much better than expected as well. So this continued to drive the major pairs, not just the precious metal, lower right through until the close on Friday. Okay, so we'll compare with the US dollar index, the DXY, to see whether the dollar has rallied up as well as an inverse correlation, just like the dollar yen. But you can see likelihood that against the majors, the US dollar definitely has been boosted. Okay, let's switch over to the DXY. And here's the US dollar index with all green throughout the week last week, and starting from the strong move on the Monday, right from the start of the week. So inverse correlation with the spot gold as well, where it fell straight from the Monday. And this was after the previous Friday, where it managed to find support and climbed back up above the 105 and the daily 55 EMA, above the support zone at the 78.6 retracement. So that was a critical support level, as well as the trend line. And then continued higher after a pause on the Tuesday, but yeah, from Thursday, Friday, continued right into back up into the 21 fib retracement already. So already at the 107.80 level. So very strong bullish move for last week after faltering and retracing down for the last 3 weeks. Let's expand this, and let's also take a look at the weekly time frame. And yes, you will see a very strong bullish engulfing here. And on the weekly, now we can see that there was a bullish move after 2 attempts to find support with the wicks here, and bouncing it back up as a hammer for 2 consecutive weeks. And that's the unleashing the bullish momentum last week. Get back to the daily. So we'll see how the dollar reacts now, and whether it's able to push all the way back up to retest this year's high at the 109 level. That's going to be a key resistance level. Now let's change some of these to support here. It's going to be support zone now. And this is clearly resistance. Let's move one down here to this area at 106 where it paused for a while before looking out higher. So this is going to be a key support zone. Let's make this darker here. Okay. Let's remove this channel here now. All right. So let's see whether the US news next week, some of the key news, whether there'll be any trigger to give it a further boost into the key resistance zone. And we may need to flip this Fibonacci over again. This is likely the round figure at 110. May not get there so soon, but let's mark this round figure here. It's a critical psychological resistance zone and level. Okay. Let's move back to the other pairs, the other major pairs. Let's continue with the dollar yen, where also right from, in fact, it didn't start straight from Monday. It formed a doji first. It attempted to pull back lower, but found and confirmed support at the 133 round figure, along with the 50-pip retracement of this swing move, and only started to rally from the Tuesday right into Friday and into the resistance zone at 137 and just above the 21-pip retracement. So it is also attempting to retest the recent high, this year's high, just above the 139. So we'll see if there's any positive correlation here with the US dollar index, and whether it's also going to test this year's high, intra-year high, and if it's able to break out higher to get to a key round figure, psychological figure at 140. Okay, let's move this into resistance zone. And now there's a support level here. There is also a support zone at the 135. Okay. So do watch out for these key news, especially towards the end of the week with the Jackson Hole Symposium and the speech from Fed Chair Powell. Watch out for the increased volatility there. But let's see if the US dollar index and the dollar yen is able to break through this resistance zone, test this recent high, and get to 140 round figure here. All right. So do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.